morning, everybody. Monday, February 13th, and it is the traditional Super Bowl hangover session. Wow, what a game! What a game! I will say, the Rihanna show, it was pretty spectacular. All the special effects, how they had those big floating platforms, but the concert was a little bit just. Yeah, I personally, I was kind of waiting for Eminem to show up and do the duo together with Rihanna, and I think everybody would have gone nuts. But then I think it would have taken away from Rihanna, so totally understand it. Anyway, it is Monday, the hangover session from the Super Bowl. I don't have any stats on this. I'm just going off of 20 plus years, remembering this. But we're dead flat. We're dead flat on futures. We're dead flat. We were down a little bit overnight, and we've recovered that. We're dead flat. I will bring you on here very quickly to, well, I'm going to show you anyway on the other charts, so I don't need to bring this one over. But we are hovering right at overbought on the ES and the NQ futures. So opening flat, I've already, again, those people that have interactive brokers can get out there and start making trades this early in the morning. And I've thrown out an early morning trade here. Buy the 41.20 calls, sell the 41.15 calls, bearish call credit trade. It's at $1.25 right now. The last three closes I've shared on there as well. And you might be able to get $1.50, maybe. But the only reason I say that you might be able to get $1.50 is because your VIX has a gap up, and there's a pretty decent chance that that gap up gets filled to the downside. That can happen by being just a very boring, slow trading session, or it could happen from a little tiny pop. But bring you over here onto the futures, and like I was showing there on the weekend, I'll zoom in here. On that NASDAQ, we're right back over here at that January high prior to the FOMC. We haven't retraced the entire FOMC candle, but we're just hovering right there as we were on Friday, just fractionally up. But again, show you what I am looking at here. And that 1 hour is just starting to get up there into the overbought warning level area. So it's not favoring very well that we are going to get a strong move back to that 5 and 10-day moving average, back to that high level as we had there in the overnight session or on Friday morning. ES, same situation that we've got over here on the ES, whereas, come on, we're not quite overbought. We are undoubtedly looking to be a little bit more bullish from just looking here on a 1 hour. But again, we're looking somewhere maybe up there around 20 points to the upside. And we're definitely going to be overbought if we can get up there. You can see here, just clearly see, it's been nothing but green candles since the Super Bowl ended. Green, 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 green. We've had nothing but green candles all night, overnight, since we had that little bit of a gap down as we started. But again, it's Monday. It's the day after the Super Bowl. CPI is tomorrow, and it's definitely something to consider of this being a fractionally weak trading session. Again, over here, I've got two different drawings I'm looking at. I'm looking at a bullish one and a bearish one. Both of them do want to point that we do go a little bit higher, but where we are at current from a bullish point of view, okay, using the white 1A, 2B, this should be the 3 that we placed back 2 weeks ago when we hit that 41.95. And as long as 4 does not break down below this high over here on 1, right around 39.11, this bullish count should still continue to be intact. And that next wave 5 would be looking to get up to that level I talked about for months now, right around that 43.25, 43.75 area. So Still looking for a little bit more downside as we progress, but again, here with a 4 hour on the SPX, and you had this oversold warning as we had that sell off there on Thursday. Again, this being a 4 hour time frame, that was enough to say, you know what, it's time to take the trade off. Here on the 1 hour, as you can see, we got very oversold on the Friday morning, and we had a bounce already back up to the halfway point. So we're not over here screaming, get out of any kind of long that you're in and get into puts, but we're definitely not in a position where it's saying go and get long. And as you saw there on Friday, very, very, very slow trading session. You know what? I'll remove these. Just a very slow trading session on Monday or on Friday. Nothing spectacular. Couple of times early in the morning, 40.90. Again in the afternoon, 40.90. You hit your low here at 2:30 on the dot, and the algorithm kicked in, and you had your push back up here into 40.90. So nothing great, nothing fantastic, nothing table pounding, screaming, but come back onto the stats. And again, we did have a red week last week, but the red week was only down 29 points, which is not under control of the Bears. All this was a red week. That's it. So far for the month, we only have a 158 point range. So again, doing the math, 41.95 full moon. If we are going to consider that 41.95 as being our high, we'll just do a quick sum right there. 41.95 minus, we'll call it 300 because that has been the rough average. We'd be looking at 38.95 for our low level. And I've only been talking about that 39.50 of what I'm looking for, and then bring you back over here on the charts. And again, looking at that, not to negate anything, 39.11 area. So they kind of coincide, they kind of sync. But today being Hangover Monday, tomorrow being the CPI trading session, we are going to obviously get some clarification on the CPI. So again, here's the trade over there on the screen. And I'll show you here, I am watching this. I'm watching this very closely. And what this is here is the SPY February 24, 404 puts. They made it up to 588. The March 3, 404 puts made it up to 689, whereas the March 10, 404 puts made it up to 775. All of them are priced roughly the same as they closed on Friday. 672, 533, 433. They're roughly around $1 difference, but for that dollar, you're getting an extra week. And bring you over here onto the SPY chart. And why I'm there where I am is that was your low over here early Friday morning was 404. So I'm using that strike as a potential target to play should the opportunity arise that we can get back into a half decent puts position like we were earlier when we went back there at that 41.18. Although we were already, or I was already into puts prior to the FOMC, and then got that 2 day shocker and a week of going nowhere. So it's potential there as to what we've got. I would love to see a visit back to that 410 area. I just am not 100% convinced that we're going to be able to get a run there today. The CPI report, like I shared already over in the weekend, and I'll share in the email, plausibly, because of the new accounting numbers, might get a little bit of a pop off of the CPI. And if we do, I will then use that to utilize to get into those March 10 puts. So, yeah, not much going on here. It's a quiet day. Anything you want, send me a message in chat room.